Good morning. We getting started pretty soon here. Good morning. Hope everyone out there is having a good day, good start to their week. Yeah. This should be a fun one. Got a lot of ground to cover. Let's see here. It is Tuesday, May 20th, 2025, 9 a.m., and that means it's time for another episode of Back to the Futures with me, Markets and Mayhem. And we've got a lot going on in these markets, a lot of bullishness on this rebound, causing flows to come in record numbers from retail over the last week. On the other side of it, we've got fund managers that are very under allocated to this market. So it's really a question, is retail right like we were back in 2020 when we bought the low as professionals were capitulating? Or is this a bit of a different situation? Is this going to be us as retail providing liquidity to these market participants that are exiting? We'll see. Time will tell. But at the very least, today's trading environment is setting up to be a pretty interesting one. Now, as we gear up for the session, be sure to join us on the Bookmap Discord. They've got a lot of great activities there, educators, and of course support for people who are wanting to learn more about Bookmap or troubleshooting any issues they might have. There's also some great educational material on the Bookmap website, including this new course, Supply and Demand Setup, so you could check out free online. Use the QR code or link below. A bit about me. I've been trading for over 20 years now, and it's been an amazing journey. I've learned a lot along the way, and I was fortunate enough to have a lot of very helpful mentors earlier on in my journey. So part of the reason that I share as much as I do and I try to focus on education is I believe in paying that good fortune forward. There's a lot of nonsense out there as it comes to financial markets. I think it makes sense to learn for ourselves how to discern what's signal, what's noise, so that we as traders and investors can make better informed decisions. It's not about copying other people's trades or investments. It's really about coming up with our own process or system. That way we can become independent, we can rely on ourselves and our analytics, and we can iterate and become better over time. So it's all about depending on yourself. And I think that's also why it's important to look at taking an approach that's driven more by data than just by gut feel, and always managing risk with the idea that trading is a business. We're buying and selling inventory repeatedly, hoping to capture a positive spread. We don't need to dress it up and make it fancier than it needs to be. It's not the idea of next week we're going to buy a Lamborghini from these 0 DTEs. Sure, a lucky few may end up having that happen. Sometimes, however, getting lucky in trading is the worst thing that happens to you, because then your ego gets big. Then you start sizing up into trades that are just driven by, well, I must be right, and then you blow up. So it's much more about creating a methodology, taking a modest amount of risk, and finding a repeatable process that works for you, your psychology, your style to trade these markets. Let's talk a little bit about why I watch order flow. One of the big things that you'll hear from folks talking about order flow, or the tools that are focused on analyzing order flow, is this idea of deltas. And deltas are very simply mathematical differences. So you might see deltas in the volume profile. You might see deltas in an individual candlestick, or as Bookmap shows it, you might see deltas in these volume bubbles. What the deltas are showing you is the difference between buyers and sellers at a given moment in time. Large deltas indicate aggression by one party, and this can be helpful for us as we're navigating the trading environment. And we'll talk about some of those examples as we go throughout the live stream. Looking for large passive order flow or icebergs is very helpful. It's also important. It's also quite misunderstood. I still see folks looking at volume profile charts and saying, aha, look at that big order there. That must have been an iceberg. But that's naive inference. We don't know. We're just looking at the volume profile and saying, I think that might be. The reality is that having that order flow displayed to you in real time as it's coming across the tape is much, much, much more helpful than guessing in hindsight. So MBO data includes icebergs and stops, and seeing that large passive order flow hit the tape can be a moment where a rally starts to cap out if those icebergs are selling it aggressively. Or it can be a moment where a downturn even starts to reverse if you see buying coming in as these big stop runs are hitting the tape, especially. That divergence tends to be a pretty solid indicator. So looking for that large passive order flow, and I'm talking thousands of icebergs in short time in something like the S&P 500 futures contract, that can be really helpful. It's also, in my opinion, helpful to look for things that look like exhaustion across multiple time frames. For example, at the April lows, I was posting on social media how I felt we were exhaustively oversold. And that was a multivariant exhaustive reading. We saw it in McClellan. We saw it in number of stocks below their 50, below their 20. We saw it in a variety of measures. We saw it in positioning and sentiment aggregates as well. So that's exhaustion on a longer time frame. But on a shorter time frame, when you're trading intraday, it's all about finding someone getting just a little bit too aggressive, right? So exhaustion can be maybe someone coming in and just sweeping the heck out of the whole order book very aggressively, and then you see that momentum fade. And I've built an indicator that identifies exhaustion in futures. It's focused really on the NASDAQ and the S&P. And it's been pretty helpful because we've had such erratic trading conditions that seeing some of these things, these aggressive deltas, large iceberg orders, and exhaustion prints can all be helpful navigating that intraday order flow. Let's talk a little bit about the options market. We're back in positive gamma. We've been there for the last couple of weeks as the market pushes higher. And we're starting to see some pretty big areas of resistance emerging overhead. So that makes today's trading tape even more interesting, in my opinion. Let's talk about some of those key levels. We've got a pretty formidable call wall based off yesterday's options positioning and demand around 59.65 SPX. Above that, we also have the second largest level of net call positioning at 6,000. And below us, we have the volatility trigger at 5,900, gamma flip at 58.87, and a wall of puts for some generous support at 58.75. If we do get taken below that put wall, gamma 2 is a large magnet that could easily pull us to 5,800. So we can see these are the large levels of customer demand in the options market near spot price of the S&P 500 cash index. So they make them worth watching. And this is also why I layer on the SPX options visualizer into Bookmap to get a better idea as to where some of that flow may be happening. So I'm just going to take one quick moment to share this on social. And we're going to go over to the weekly pivots. And this is also an interesting area to watch. We are above both of these pivots. I would look for shorts below. I'm still inclined to look for longs on a swing time frame above. So I'm also just going to quickly share this on social for the benefit of folks out there. And let's quickly talk about some of the awesome deals that we've got going on right now. And then we'll go right into Bookmap and start looking at this market as we approach the open in just about 20 minutes. If you'd like to get up to 40% off of Bookmap, that's a big 40. Visit TraderAid.com/bookmap. That's TraderAid.com/bookmap and scroll down to the special offers. And if you'd like to get 20% off of TraderAid.com, check out some of the awesome trading tools, ideas, analysis, and our amazing community. Visit TraderAid.com and at checkout, use the code Mayhem20. All right, folks, let's dive in to what's going on in these markets here. Give me one sec to looks like I closed a few too many windows on that. So we're just going to bring Bookmap right back up here. When you first fire up Bookmap, it takes a moment to pull in and backfill some of that data, assuming that you have historical data enabled. This is helpful because you can look back, you can see what happened in the pre-market, in the overnight session. I usually like to look back at the European session and see what was going on there as an example. The other thing that I like to do is I like to zoom out just a little bit further and see what's going on some of the longer time frame charts. So I'm just going to quickly share this chart as Bookmap's loading up. These are my S&P 500 swing pivots. And you can see how these have been really helpful for navigating the regime shift and also finding key areas of resistance and support. So this weekly pivot, the 59.27, comes from these major pivots. This is something that's available at TraderAid. These pivots are generated for the NASDAQ, the S&P 500, and we're adding pivots for other assets as well, including gold, crude, Bitcoin, the Russell 2000. And then you can also see we have the SPX options visualizer levels layered in here. So for today, the big resistance level overhead, if we get a push, is going to be this 59.97 level. And below, we have really sizable support at 59.27. Now, if we break below that support, we can easily start to come back down to that 58.39.25 pivot. So that's why I'm watching that as a pretty decisive pivot for this week, 59.27 on ES. So let's talk a little bit about what happened in the overnight session here. Pretty boring overall. Pretty much flat from the London Open, trading in about a 15-point range on S&P futures, just around the point of control that was pulled a little bit lower recently by sellers. Yesterday, call volumes were also quite healthy. 149,000 calls bought on the most active contract. That was that 59.60 contract. 59.50 was also pretty popular, 113,000 calls bought there. This gave us a sense for some of the magnetism that was going to pull us higher. And if you were watching my Twitter feed, I was posting about this flow as it was developing, because you can see in the options flow when that demand for the top two call strikes really starts to get very heavy. And I mean 40% or more of excess in calls versus puts on those top two of each. That tends to be a good leading indicator that you're going to move higher. And we've had that exact type of flow for many days. You've probably seen me on Twitter posting about that flow. If you've been on the TraderAid Discord, you've seen that flow. It's updated every minute, and we also have a number of tools to watch it in different asset classes and to overlay it onto charts like you see here. That's been a really helpful leading indicator, because this has been also a pretty thin market. It's a market that moves off of news as well. And of course, news can change everything very quickly. But first and foremost, I just follow the flow. because I've found that that's been the most reliable compass for price. Is it going to work 100% of the time? No, nothing is going to work 100% of the time. But it definitely works a lot more often than other methods of approaching how to find where price is going and what the trend is. That is to say, when you add order flow analysis into your existing systems to qualify momentum, it can help you to find more realistic price targets. It can also get you out of your own head, like, oh, gee, Moody's downgraded the US. We should definitely be selling off. Maybe, but watch the order flow, because it really doesn't matter what we think. What matters is how big players are transacting, how they're going to move price. Because at the end of the day, we can think all kinds of different things about the market. And those thoughts, those narratives, those macro pictures, they matter on a much longer time scale. They don't play out in 5 minutes or 5 hours or 5 days. The vast majority of the time, these are bigger picture themes that don't really matter at all to risk assets until they do. You can see the bond market's not particularly happy. You can see gold is pricing in increasing uncertainty and it's on the rise again. But you can see there's a degree of complacency in equities right now about everything that's happening. Rising yields, downgrade of US debt, the trade war remaining unresolved and on pause, seemingly without much traction with key trading partners. So there are risks out there. The AI narrative is also somewhat more questionable at this point in terms of when that return is going to be given to investors. But risk assets are nevertheless able to climb a wall of worry. And add to it, when we're watching the flow, when we're watching the tape, that's what matters. Because we're trying to make money. We're not trying to be right. We're not trying to put in a position and say, well, the market should really sell off because I think it should, so I'm going to short into that. That's a losing idea. Now, maybe one is doing that on a swing time frame and starting to build some of those shorts or hedges now over a longer period. Sure, I could see that. But coming in yesterday and just shorting and expecting that the market was going to roll over because, the news was bad, I'm sorry, but that just doesn't work, especially these days. And when you see options flow coming in aggressively targeting higher strikes on SPX and where we're trading, you have to respect that. And as yesterday went on, that flow got more and more aggressive towards calls. So I think that's what's worth watching. It's worth watching those deltas, the icebergs, signs of exhaustion, and the flow in SPX, because a lot of these market makers are hedging their deltas. And this is a different delta, but they're hedging their exposure from selling options contracts, whether calls or puts, by neutralizing it through futures contracts. That's where a lot of that, not all, but a lot of that hedging happens in futures. So if you look at the S&P 500 options complex, which trades about 1.2 trillion of notional every single day, and the futures contract for the E-mini trades about 250, 300 billion notional every day, really is the tail or the options that wags the dog, or the futures. So watching that flow is a really helpful leading indicator most of the time. And if you look at volume profile, a fun fact is volume profile for S&P 500 futures, most of those footprints are from market makers hedging their delta in S&P options. So volume profile has taken on a completely different meaning. It still works. It's still relevant. But it's sort of like, again, and I like to use this analogy because it's so apt. If we're not watching the options and we're just watching the futures, it's like sitting in Plato's cave, watching the shadows on the wall, missing the fire that's casting them. That's why it's so important to be willing, to be open-minded, to look at other data, especially when it has a very high hit rate of impacting the market. So I'm going to get off my options soapbox now. We've got about 10 minutes left until the market opens. Just going to start checking in to see if we have some questions here. John Ellison asks, does Thinkorswim have the visualizer? You know, John, that would be a question that would be great for the Bookmap team. And the question is really, does Thinkorswim have Cloud Notes? Because if it has Cloud Notes that can pull in that data, then yes, technically I could make that happen if I know what the formatting of the symbols is. So let me know, Bookmap team, if you're able to answer John's question, if Thinkorswim has Cloud Notes, I can then help him out with the SPX options visualizer. And then a comment on one of the YouTube chats from RS, with Tesla being the most retail bought stock over the last week, retail gonna get rugged. Now, I think that, we should be mindful about self-deprecating commentaries. We're retail. I'm retail. You're retail. I don't want us to get rugged. I want us to win. And I'm kind of hoping that maybe this time is different, that retail buying that big dip in April is going to be a winning trade for them. I hope a lot of people have booked big on that trade. I know a lot of retail made a lot of money from buying the lows in 2020 as well, as institutions were puking that up. So I'm cheering retail on. I'm not a huge Tesla fan. I think the company is in deep trouble. But I also look at Tesla's chart and I'm thinking to myself, this thing could push a bit higher before it caps out. But overall, I do think that in the long run, I don't want to be invested in Tesla because I think they're being outmoded by just about all of their competitors, whether it's self-driving with Waymo, whether it's EVs with some of the Chinese and other EV companies around the world, whether it's robotics with companies like Boston Dynamics. They're not really in the lead anywhere anymore. So, over the intermediate to long run, I think they underperform the space. Now, in terms of Tesla itself, the skew on that stock is not too blown out to the bullish side. So if I was looking to fade this thing, knowing it's so driven by options, I want to see it exhaustively overbought, which would mean I'd want to see Tesla call skew getting to very, very bullish levels. We're only slightly bullish now on Tesla call skew. And we could see heading into today's market, there are some pretty big demand zones higher from here, 350 and 355. So we'll be watching that and some of the flow in Tesla. I'll also be adding the visualizer to single stocks next. So we'll be able to see the flows in things like Microsoft, Nvidia, Tesla, all the single stocks, probably as of next week or the week after's Back to the Future stream. We'll see. There's just a few things I need to plug away at to get that going. But pre-market, Tesla's got a chunky little bid here. It's up about 1.69% yesterday after falling 2.25% the day before. So pre-market up 1.69% on Tesla. Let's check in on the overall market as we're just about 7 minutes from open. And looks like we're set to open a bit lower. S&P cash is set to open. Let's see here. Looks like about 0.2% lower. NASDAQ set to open about 1/3% lower. Russell 2000 opening just about flat, down 0.07%. And Dow looks like it's set to open marginally positive, up by 0.2%. We're going to be watching that Gamma 2 level here as we approach the open. We can see that is likely to be a bit of a magnetic area. There's a lot of interest in puts and calls at that level. That put interest rolled up as we got closer to the close. So I have a feeling we'll be interacting with that level again today. And I'm just going to take a moment to check on some levels here. So that gamma 2 is going to be 59.69 for ES. And just above it, we've got that call wall. That translates to 59.84. That's likely to be an area of formidable resistance. Let's check on NQ as well. We have similar levels there. I'm just waiting for the options visualizer to queue up some of that data. So the NASDAQ, the call wall is going to be 21,450 on NDX. And in NQ, that's going to be 21,527. So look for that as a potential area of resistance as well. There's about 4 minutes away from the market open, and the event calendar is pretty slow. It's really Fed speakers dominating this week. So today we have Barkin and Boston who have already started speaking. We've got Collins coming up at 9:30 a.m., another Fed speaker at 1, another Fed speaker at 5, another Fed speaker, I'm sorry, 2 more Fed speakers at 7 p.m. So that's 1, 2, 3, 4, 5, 6, 7 Fed speakers today. Bit much. If it was up to me, I would just give them their own TV show that no one watches, or even just pay them not to talk. They just really, it's all trial balloons. And if you've been trading this market for a long enough time, you probably recall a time where there wasn't this never-ending parade of Fed speakers. Outside of the blackout period just before the meeting, there's just so much of this. And to me, it feels like they're just floating trial balloons, trying to see how the market reacts to different things they're saying. Also gives them a little bit of cover because, you know, they could say, well, I didn't agree. I was out there talking about this and the Fed did that. So that wasn't my fault. So it's just, yeah, it's mostly noise. But some of the stuff they say can at least give us a sense as to what their thinking is. And most of their thinking right now is that the earliest they want to cut rates is probably September. And that really depends on inflation data continuing to come in and the labor market weakening further from here. But outside of that, really nothing else going on the economic calendar. It's also a light week for Treasury auctions. So we don't have any real auction activity today for anything of duration. Tomorrow we've got the 20-year auction. That'll be interesting because Japan overnight just had its worst 20-year auction in, I think, since 2012. And that blew out yields across the yield curve. I think their 40-year yield was at the highest level ever. The 30-year yield was at the highest since like it started trading. And the 20-year yield was at the highest level in like 25 years. Just like everything out on the Japanese yield curve long end is blowing out. As the Bank of Japan pulls back and we start to see some real yield discovery, markets starting to price in that the risks in Japan, their ability to pay back debt, combined with some of the inflation that's becoming a little bit more entrenched, albeit low level, but it's a factor to consider when you're buying debt. At what rate is the currency being depreciated? All of that suggests the market is justified in demanding a higher term premium or higher yields as duration gets longer and longer. Market's about to open in just 1 minute here. It's going to bring up a news feed or two. And folks, if you have any questions or chart requests or otherwise, let me know. Got a request from Meta and Reddit, so certainly I'll take a look at those as we get ready to start the trading day here. So first we'll pull up Meta, and I'm just going to pull up the gamma for it as well on my screen. So overall, this is a pretty decent looking chart for Meta. Let's zoom it out to the weekly real quick. I just want to see a little bit more on the volume profile in a longer time frame. Yeah, so overall, this chart's looking pretty constructive. It looks like Meta has clawed its way back into an uptrend. And so if we're looking at this from the perspective of, trend health, I'd say we're back looking at a pretty decent uptrend after that huge head fake, multi-week head fake below. But we're back above the 21-week moving average. We're back above this trend line that it's overall honored quite well. And we see the MACD histogram start to neutralize that negative momentum. We also see interest in calls building at much higher strikes, all the way up to 700. In fact, 700 would be your call wall for Meta. That's the highest area of call interest with reasonable proximity to current pricing. There's also decent demand at the 650s and 660s. So I'd say overall, the market's pretty bullish on Meta here. The chart looks constructive, as if it has room for continued upward momentum. And when Zuck was on the conference call, one of the things that he said that investors seem to like hearing was that they are finding ways to use their AI to better target ads and to give advertisers more tools to build better campaigns. Although he also said something that I felt was very strange. This was after the call, as I recall. He was talking about AI becoming everyone's default friend, that everyone would have more AI friends than real friends. And to me, that just seemed like a level of lonely disconnectedness from the world around us that's a little bit revealing. Nevertheless, the stock itself looks pretty good here. I would change my thought on that if we get below this trend line and below the 21-week moving average. Markets are opening here, just a little bit of pressure. We'll get to that in a moment. We've got Reddit on screen. Reddit looks like it's trying to recover, but I can't be quite as bullish on Reddit as I am Meta. Meta's trend, it was much healthier. Reddit, it's below the Ichimoku cloud. It's below the 21-day moving average. Positive momentum is starting to wane here, and it seems to be starting to try to reject this high volume node. If it does reject this high volume node, let's say a weekly close below it, then it does bring up the idea that we retest this area, this zone between 180, and that could easily bring us back to around 93. I think that's where it would base out if we had that kind of consolidation corrective momentum lower. So I like Meta more than Reddit in terms of momentum near term. Reddit looks like it could be trying to build a base here, but overall the momentum continues to favor sellers near term. And I've got a request here for Palantir and Bitcoin. Palantir is a holding of mine. It's something that I've had for quite a while, and if you follow me on social, you probably remember I was pretty darn bullish on Palantir right after its direct public offering. And I remain that way. I said back in May of, I think it was 2001, that I think this will be one of the biggest companies in the world, and it's become that. It's one of the top 10 in tech, but the valuation is absolutely insane on Palantir. And that's the only thing that really concerns me about it, is just like looking at it with a 171 forward PE and 95 price to sales ratio tells me the stock is very expensive here. From a chart perspective, it looks like it's bull flagging and it wants to try to move higher here. So, overall, the chart's telling us a different story in the fundamentals. And here's an interesting tidbit. There's big options interest at the 130 strike, the 135, and the 150. Yup, 150. So I think our call wall for now would be 130 on Palantir. Overall momentum favors the buyers, but it is waning a bit. And let's look at Bitcoin real quick. Bitcoin's charged all right back up to its highs. I think this thing is in pretty constructive territory overall, but I also expect it to consolidate these recent gains. This has been such a fast and furious push off the lows, and it has a sort of pattern where it makes a big push, it consolidates, it makes a big push, it consolidates. It seems like it's still in that consolidation phase, but momentum favors buyers here. So I wouldn't be too surprised if once this consolidation period wraps up, we make a sizable push higher. And we're going to zoom in now on the S&P 500 futures. Markets are trading just a bit lower off the open, getting into yesterday's area where there was the second most active demand for puts. So you can see there's some reflexive muscle memory in the way this market trades versus where there was flow and options interest built up. You also can see there's this iceberg sell order. That's this diamond up ahead overpriced. 200 contracts sold just around this more aggressive sell bubble, and we started to move back lower to the lower end of the price range. And price is starting to look just a little bit more heavy here. NASDAQ has a similar look about it as well. Let's look at that through the lens of QQQ. This is also an interesting one to watch, and I just built the options visualizer tools for this one. We can see QQQ just narrowly above the gamma flip level and rejecting that vol trigger level, which could lead to some more volatility in the price action on the NASDAQ. Moving below that volatility trigger tends to set that off. So we'll be watching. Up ahead, we've also got Gamma 1 right around 521 on Triple Q. That can be a magnetic price level. If we push back above that vol trigger level, we could get pulled right back into Gamma 1. Obviously, we'll want to watch how some of these flows take shape today as well. And checking in on Bitcoin, a bit of selling pressure here. That corrective consolidation we talked about in the chart seems to be ongoing. And that's healthy. You really don't want to see anything just go straight up. Healthy uptrends, they'll move higher and then they'll consolidate. And then they'll move higher and consolidate, more like a set of stairs moving higher. That's what Bitcoin's doing. That's what gold is starting to do again, which is, by the way, very healthy to see that pullback in gold. It flushed out a lot of weak hands. It really reduced the aggregates of positioning. So gold actually pushing higher off the U.S. stock market open. I think gold is ready for its next leg up. I'm pretty bullish on gold here. And I think that flush of the crowded positioning we saw in COMEX gives us room for that next leg, because you're going to have folks wanting to chase that price higher as gold retrenches and then starts to reiterate its intent to move quite a bit higher. I think gold can easily get to $4,000 by the end of this year with the way things are going. Now, obviously, if we inject a lot more certainty into trade policy and economic policy, and we significantly reduce the chances of a recession, then gold will cap out. Gold is an uncertainty hedge. That's really the biggest role it plays. But today's price action, and even from the overnight, it's pretty constructive overall. I think we can get back up here to that 8:30 a.m. high during today's trading session. So let's watch for that. We see some interest building above in gold, but more interest below, interestingly enough. Around 32.26, you've got 319 contracts on bid. That's pretty big for an order book that's just about 6,000 deep. Let's check out some of the mega cap stocks this morning as well. Got Apple selling a bit off the open here, now consolidating. Order book just looks a little bit heavy. About 2-to-1 offers to bids. Overhead 207.50 could provide some resistance here with that larger offer emerging. Got Broadcom on screen, a similar looking order book, a lot more offers and bids, about 2-to-1. Pretty decent offer overhead at 235 with 68,000 shares up there. Amazon, similar look as Broadcom, but not quite as much of an excess on the offers, about a 50% excess on offers versus bids, maybe a bit less than that. Watching 207 as a really big offer zone, and 202 is a really big bid zone for right now on Amazon. A lot of these levels also correlate with flows and interest levels in options, which will be helpful when I have the options visualizer on all these single stocks. I'll be able to see that confluence even more clearly. But for now, Alphabet shares or Google seeing a very large offer overhead at 170. That came on after the market opened. It got a lot bigger. And this one has a more balanced order book, about evenly matched bid and offer. Alphabet, of all the tech stocks, seems to be the one that's the most attractively priced and with some unrealized potential. There's a lot of nervousness around their search, but search revenue continues to grow even as more people lean into AI. Meta consolidating after the open here. It's got a pretty evenly matched order book like Alphabet shares with a very large offer overhead at 650. And Microsoft consolidating post-open. Big, huge offer at 460, 129,000 shares there. And point of control being pulled lower by some of that opening selling. Order book similarly matched to Google and some of the others we've seen, where it's just balanced. NVIDIA's got a pretty heavy order book, offers about 2-to-1 versus bids. Big offer overhead at 135 with 104,000. Big bid below at 133, 110,000 on that bid. And the stock making a new low recently off the open. Just stair-stepping a bit lower. And Tesla shares continuing to push higher here. We talked about that level of interest overhead, 355 pre-market. We got very close to that, but we can see buyers just didn't really have the demand to push through. So we got right under it and rejected. This is one of the reasons I really like watching the distribution of liquidity in the order book, because this is auction theory, plain and simple. You know, when you have an excess of demand, you move higher. When you have an excess of supply, you move lower. When they're evenly matched, you move sideways. Well, clearly, Tesla's composition of buyers and sellers didn't have the demand to push above 355. So that's telling you up there that was an excess of supply, and that led to a rejection of about $5 lower. Watching SPY here. SPY balancing off its put wall here. That's an area where there's a large amount of put interest that can create some support for price. And QQQ seems to be trading in an expanding range. No real clear sign of direction of yet. We'll wait for some of that flow to hit the tape. Small caps, which were a little bit more resilient pre-market, seeing just a little bit of pressure here, making a new low recently on IWM. Let's take a quick look at gold. Gold seeing some iceberg selling. So some passive orders coming in to sell gold as it gets closer to the pre-market highs. But overall, buyers seem to be taking it just fine. They continue to try to grind price higher. So I remain constructive on gold. NASDAQ, like the S&P, just sort of consolidating here. We're going to move back to the S&P futures. You can see they're also similarly just trading in a range. We talked a little earlier about how it was looking just a little heavy. Since then, we did make 2 new lows, but overall, we're still trading in this range. Also had a decent stop run. Sellers getting stopped out, 121 contracts there on that move. So again, coming into today, not a really strong sign of directionality of yet. Favors the sellers, but only modestly if we're looking at NASDAQ, S&P, and IWM, as well as some of the larger stocks. And one of the things I like to tell traders, because it's an important part of survival, is you need to behave more like a sniper. You need to be very tactical and patient, waiting for the market to come to you. As small retail traders, there's no reason to rush this process. Our edge is our agility, and it's also our ability to ride the momentum of larger players. John Ellison asks, are offers to sell and bids to buy? Yes, offers are asks. They are folks that are stepping in with intent to either sell, to close a position, or to open a position, or AKA short. And then bids are buy orders. These are all limit orders, and that's an interest to buy to open a position or to buy to close a short. And we are seeing some more selling pressure coming in here, which is interesting. Put demand is actually higher than spot pricing on SPX right now. And call demand is still leading the way. Like yesterday, we're seeing some early signs that there are some bulls out there. So we can see those calls starting to hit the tape. Puts are starting to pick up as well, though. It's going to be interesting to watch the flows today. Right now, looking a little more evenly matched on the top 2 strikes on each side. But that asterisk near the hot call tells us that that is the most active strike on the tape for right now, and that calls overall are transacting in excess of puts. So we'll watch that flow. For now, however, sellers have their own ideas. They are pushing price lower, making a new low in S&P. Order book depth is also very low here. It's just 25,000. And we've got a big sell coming in. Big pull lower coming in, bringing us to a new low. Last 5-minute candle brought us down about 10 handles on S&P futures. So that's pretty chunky. And we do see some of that flow in the puts picking up. Now it's pretty evenly matched between puts and calls. And when that happens, my software draws this midpoint level that tells you sort of where we are in between those most active calls and puts, because sometimes you just kind of get stuck in a chop. So it's good to see that midpoint on screen to know that that potential has risen. We also see some aggressive absorption by sellers here, absorbing some of those buyers. That puts that red box on screen, 453, showing you the number of contracts that transacted at that aggressive absorption print. And there was a large put sweep coming in for triple Q. That's the NASDAQ 100 ETF, targeting the 511 strike, about 621,000 in premium paid. And that swept that entire offer off the book. So that's one that's expiring this Friday. So someone either hedging some downside risk or betting on lower prices in the NASDAQ, looking for about 1.7% downside from current levels. Put flow now pretty evenly matched with calls. It's a change of character from what we've seen in recent days. And the most recent update has calls now 2-1 versus puts. So bulls are making themselves known here. Still early in the flow, though. Let's see how this develops. Meanwhile, S&P futures continuing to grind lower. Let's take a look at some of the mega cap stocks for clues as to what's happening in the biggest movers of markets. Apple, after making that low from the open, just sort of consolidating sideways in price. 2-1 offers to bids on the order book. And we have a new bid coming in just near the session low, around 206.50. About 7,000 on the order book there. Got Broadcom. It had a bit of a pull lower before the open and at the open, but has been rebounding since. And it seems like buyers are struggling to get above that 230 offer. About 10,000 shares on offer there. This is another order book where offers are pretty heavy, about 2-1 versus bids. Amazon shares trading sideways here, just testing that point of control, but overall consolidating. Similar look with Alphabet, mostly a sideways consolidation here, looking a little heavier than Amazon. Meta shares, similarly, just consolidating sideways here off the open, just kind of hugging the point of control. So really not a lot of decisiveness in the mag stocks yet. Microsoft, however, trading to a new low recently, taking out that 6,000 bid and starting to see a little bit more aggression on the session volume profile just around that level where we opened and where we absorbed that bid. NVIDIA bouncing off the lows, but it just recently made a pretty meaningful new low here. Just keeps stair-stepping lower. And Tesla, a similar look. It got to that high. Remember we talked about this. This was seen by buyers as too much supply. So there was several attempts to try to get into that zone. Every single one of them was met by just enough selling pressure and that lack of buyers stepping up to show they had the demand to take out that 109,000 offer. So for now, Tesla intraday in this defined downtrend of lower highs and lower lows with an excess of supply overhead. Go back to SPY here. And we can see that call flow in SPY is definitely more aggressive than puts. So that's looking pretty bullish off the lows, that flow is improving. Let's look at triple Q. Similar look. We're seeing flows improve in triple Q. Not as quite as much bullishness as SPY in the ratio, but certainly helping to pull it off the lows. Small caps have a pretty similar look. Lots of call buying going on in the Russell, about 5-1 versus the most active call versus the most active put. So there's a lot of bullishness flowing into small cap options. And then let's look at SPX through the lens of ES here. Still pretty evenly matched puts versus calls on SPX translated to ES levels here for now. So it looks like if we're going to break this down, retail is more bullish today than institutions. If it's the SPX flow that's leading the way, that kind of suggests it's more institutional. But if it's SPY flow leading the way with calls, it suggests it's more folks like us, home gamers, retail, buying those calls. I'd really like to see the SPX flow pick up meaningfully here. That'll give me more confidence that we have room to run. Got just about 5 minutes left in the stream. If you're interested in checking out Bookmap, you can get up to 40% off visiting traderaid.com/bookmap. Just scroll down to the special offers. And if you'd like to check out what we're up to at TraderAid, visit traderaid.com. You get up to 20% off using the code Mayhem20 at checkout for our Discord. We also have the SPX options visualizer. You can learn more about that by visiting traderaid.com/SPX. That's traderaid.com/SPX. And soon we'll have visualizers for the NASDAQ futures via NDX, Triple Q, SPY, and the most popular optionable stocks. So stay tuned. Lots of really exciting developments in the works here. And I want to thank my partner, Bookmap. It's always fun doing these streams. Set it on your calendar every Tuesday, 9 a.m. Eastern. We're doing Back to the Futures, interactive questions and answers. Always welcome people asking whatever's on their mind so they can learn more about the markets in front of them. Very choppy trading day so far here. And again, with this options flow in SPX, with the midpoint on screen, that's exactly what one can expect. SPX flow is the big dog. It's worth watching SPY and Triple Q, but SPX in the options complex is by and large the biggest by a lot, orders of magnitude. So when we're watching the flow, I always like to start with SPX, focus there, and then drill my way down to other areas. And we see put flow now just picking up a little bit in excess of calls. You see that plus by the 4K on the hot put, telling you that's now the most active strike on the chain, but that overall the put-call ratio still favors calls full chain. This is all documented in the manual for the SPX options visualizer. So I know it's a lot to go over, but you can find that manual if you go to the traderaid.com/SPX link. The checkout link actually has the manual as a part of its documentation. So whether you buy it or not, you can still download that manual and learn more about how the software works as a part of thinking about whether it fits into your process. But if I had to just, take a stab at what's going to happen today, just stab in the dark. We've only got like 27 and a half minutes of trading data so far. I'd say we're leaning to the downside, that it's more likely that unless this flow improves meaningfully, we're going to have a choppy day with the path of least resistance being modestly lower. Not looking for a big move, but again, this is also a Trump market. It's not a bull market. It's not a bear market. It's a Trump market, which means headlines can completely change the story of the tape at any moment. And we do have a 3 p.m. announcement coming from Trump. So as we wrap up, my closing words of wisdom are: in a illiquid market like this, it pays to size down, use wider stops, and be more careful about what trades we're taking on, because this market can rip face and it can dump, and it can even, you could be on the right side of the trade, but the choppiness can boot you out if you don't have a wide enough stop. And if you're going to widen your stops, you've got to take down your risk, which means reducing exposure. Part of the way I trade is I don't want to lose more than 1 to 2% on any single trade of my total portfolio liquidity. So if I'm widening my stops, that means I've got to take down how much risk I'm putting on for each trade, right? And that widening of stops, that's aligning with the environment. An environment of higher volatility means an environment where it's more likely that price discovery is going to whip around both sides, buys, sells. And so especially when there's an event volatility catalyst, and that 3 p.m. announcement, for all we know, could be one of them, be mindful, be nimble, be safe out there. I will catch you all next week Tuesday at 9 a.m. Eastern. Thanks for tuning in to this episode of Back to the Futures with me, Markets and Mayhem. Have a great week ahead.